Sırada Türkiye'deki yatırım vizyonu var. Yatırım vizyonu konulu bir başlıkla sizlere seslenecek önemli bir isim. Bilgili Holding ve BLG Kapital Başkanı Sayın Serdar Bilgili ve Questex Başkan Yardımcısı Stather'ı sahneye davet ediyorum alkışlarınız eşliğinde.
Thank you very much. First of all, I'd just like to say thank you to the organisers for the very youthful headshot photograph that they've used, but also for this fantastic opportunity to interview a true icon of the real estate and investment space in Serdar. We've got 15 minutes and I think quite a lot to get through.
I have to get this first. Can I have some help please? Bir yardım rica edebilir miyim teknik arkadaşlardan? Bakabilir misiniz? Sorry.
No, it's okay. It's best to get it sorted.
Right.
Okay.
I think we're okay.
Bit of a false start, but let's
No
go.
Sorry.
Not at all. So let's park hotels for a moment and let's set the scene if we can. Serdar, you have a global perspective on commercial real estate. You invest in a number of different locations. Commercial real estate as an asset class is clearly adapting to higher interest rates, shifts in occupation and end user behavior. If we take retail, for example, and the challenge that's had through the rise in e-commerce. We look at offices and the challenges they're having, as Tom at STR pointed out, through a real shift in office occupation and working habits. What are your short and long-term views on the opportunities and the risks that exist out there at the moment for commercial real estate investors more broadly?
Thank you. First of all, I would like to thank our president, Oyan Arin, to organize this and inviting us here. As Bilgili and BLG, we invest not only in Turkey but also heavily in the United States. And yes, in Turkey the economy has been challenging lately, but US has been suffering in a major way. And I think there's a bubble to blast very soon. As you know, in the US, specifically on commercial real estate, everybody has been investing on 4% yields, 4.5% yields, even 3.5% yields in Europe. As SOFR increased up to 5.3, 5.5%, and the spreads widening, today the rates in the US are almost 10%, 12%, and even in mezzanine financing, it goes up to 18%. So when you are doing a financing of 60% on a project in the US, you're talking about a 14, 15% average cost of financing. And until now, most of the commercial real estate has been financed with 4% income, 4.5% income, 5% income. So suddenly the whole thing shifted and they're all in red. On top of this, the technology has really impacted commercial real estate in a very, very negative way. Online working, so less people are coming to the office. In the US, I think the office occupancies are 30% below what it should be, what it was before. And on retail, everybody's shopping online right now. So when you go to New York on Fifth Avenue, on Madison Avenue, where you couldn't find any retail space, it's all empty now. The stores are all empty. So again, on that level, the interest rates are higher. So all the financing companies are stuck with major office and also retail stocks in their hand. And the problem hasn't hit the fan yet. We're going to see major problems, I think, in the next 12 months in the US, and this will definitely expand to other countries. In my belief, this crisis is bigger than what has happened in 2008, 2009. Nobody's talking about it yet because everybody's hiding it. So, in my opinion, this, for us, it's creating opportunities, of course, because the prices are going to go down, and there will be a lot of real estate, specifically commercial real estate offices, that needs conversion, and that's where companies like us come in.
And how far away do you think values are from reaching the bottom? There's always a lag in terms of values catching up with where the market actually sits. How great is that dislocation?
Well,
right now?
let me just give you an example. On Fifth Avenue in New York, we have invested with our partners, I think in 2018. We bought a property to be developed. It was an existing property at $1,300 per square foot cost. And then on top of that, we are going to add conversion cost. Today, next to that building, there's an office building which is about to be foreclosed at $400 per square foot. So, I mean, this is crazy numbers. And this is not in the market yet. People are really not talking about it because everybody's going to be impacted. I see some of the biggest developers in New York all in trouble. They all have financing problems, and they keep calling Turkish investors, can you come invest with us, help us? I mean, this has never happened before. I never got phone calls from the big developers in the US asking us to partner with them, and now this is happening. So, as I said, it's great opportunities for developers from Turkey.
And it's interesting, you mentioned a city like New York. I mean, many people consider New York to be the global real estate capital of the world, and you always expect that in a time of volatility like we're going through now, there's generally a flight to quality, and that flight to quality is perceived as the center of these big, major urban cities. Clearly, actually, these urban environments are potentially where there's more distress than...
Well, New York is New York, so eventually it will pick up, but I think we are going to see a major turmoil and major bankruptcies in the next 12 months to 24 months.
And that's commercial real estate, so
Yes.
now moving a bit more closer to home and hospitality. How is hospitality positioned relative to commercial real estate to perhaps capitalize on opportunities or weather some of those challenges?
Well, hospitality in general after the pandemic has been on the way up. So all the hotels are enjoying much higher average room rates, much higher occupancies, and people want to travel. So I think compared to commercial real estate, I think hospitality is much more, looks positive. But on the other side, hospitality is a very sensitive and volatile market because now we have a problem in Gaza. Hotel occupancies in Istanbul are impacted by that. The war is not in Istanbul, but we are getting impacted. People are traveling less, they're worried. So, but I think overall, hospitality investment right now looks definitely more interesting than commercial real estate, offices or retail investments. But on the other side, residential homes, I think there's always a market for that. Although time to time it is impacted. Right now, again, it's impacted because of the interest rates. But people need homes, people need to live in homes. So we see the demand on that being more stable.
And do you see opportunities as somebody that invests in sometimes what is coined the living sectors, which includes hospitality and residential? Do you see much crossover in terms of the influences of kind of hospitality and service levels moving into the residential product and some of the residential style design moving across into the hospitality space?
Sure. I mean, we see more residential projects being built by branding or by being serviced by hotel operators, and this is getting more and more common. But I think people are realizing that just putting a brand is not enough. You need to put the substance and the service and the quality also including on side of the brand. I don't think the time is gone that people will pay a premium just for the X brand. They will pay the premium in case you have a great spa, in case you have a great concierge, you have a great valet service or F&B service. Unless you can provide these, you will not get that premium.
Understood. And given that you're relatively bullish on hospitality, does that mean that you're allocating more of your capital towards the sector? And are your financing partners, for example, kind of following you in that?
Well, we in Turkey, we keep on our hospitality investments. We have two new hotels under construction. Other than that, we're trying to just manage whatever we have in our portfolio. But in the US, we are definitely looking at new opportunities. And also in Italy, we are getting quite bullish. So we are looking at some opportunities in Italy.
And I was on a panel earlier on where we were looking at the next kind of 5 years and where the industry would evolve. One of the conversations that came up was around the future of demand and looking at leisure versus corporate versus MICE. How do you look at those different segments? Where do you think the opportunities are and where do you think the challenges might be?
Look, first of all, I think in the hospitality, I think the room rates are really high. I don't think it's going to go much higher. Not everybody can afford $2,000 a night hotel room. In Europe, right now, you cannot stay for less than 500-600 euros per night. Even in Istanbul, the rates are starting around 300-400 euros and goes all the way up to 2,500, 3,000 for a regular room, depending on the hotel quality. So I think because of this, services like Airbnb, where residential short-term stays, long-term stays, limited service residential products are going to be in demand, and we're seeing that in a major way. But I think another thing that's unfortunately not everybody, the investors have not really looked at in Turkey is one of them is the student housing properties, which as BLG we have invested heavily in student housing. Because of the Turkish lira devaluation, it has been impacted, but our occupancies in student housing are much, much higher than regular hotels. We are operating our student housing properties around 90 to 95% occupancies, and there's a huge demand. And the other sector that there's a huge demand actually is a new sector in Turkey. It's the luxurious elderly housing. This is a sector that nobody really has touched in the right way. And I think as the families are getting smaller, as people are living alone, you see more, you see that most of the residences sold in Turkey are one bedroom or just regular studios. So this means that people are living alone. And so elderly people are looking to, because as a culturally we used to live with our fathers and our mothers, we took care of them. But I think the next decade we are going to see more and more demand for luxurious elderly housing where they can socialize together. So as BLG, we're planning to invest in this sector also.
Interesting. So you're really looking at themes and I suppose macro trends where there's perhaps a misalignment between the provision of supply and what the future of demand looks like and really trying to tap into that. Understood. You mentioned about the growth of rates and how it's perhaps starting to get a little bit toppy. And I think we're starting to hear that from the industry a bit as well in terms of the relative price inelasticity of where the market is now relative to last year. How is that shaping your hotel investments and developments? Are you starting to look a little bit more at the more kind of value end of the spectrum?
Well, look, the hotel industry is changing in a very major way. There's a lot of people from brands here, but please don't get me wrong. But I think big brands that don't provide the service quality or personal service to the client are not going to survive. Because the biggest strength of the brands till today were their reservation system. With the new technology, reservation systems do not mean that much anymore. There's booking.com, there's online, so technology has really changed that area. Two, these loyalty programs, they are only good for the brands. They are not good for the investors. Because I'm forced to sell my rooms at 100 euros where the market is 300-400 euros just to satisfy the brand's loyalty program, which I don't think any of the investors are happy with this. So these big companies have to realize, in my opinion, they need to get smaller, maybe they need to be divided, and they need to look at more service-oriented business. Because as you see, the growing sector is the smaller luxury hotel groups like Aman or Soho House, or you see the Six Senses, like smaller groups that provide more service are going to be the future of the industry, in my opinion.
So it's almost those that can really deliver on their brand promise.
Exactly.
Got it. The risk-free rate, it's fair to say, in many developed economies now is kind of around 5% in terms of the interest rates, the returns that you can get on bonds, gilts, so on and so forth. If we're talking now specifically to the opportunities, the investment opportunities that exist within Turkey, where do you see value? Do you see relative value in Turkey as a hospitality investment location? Do you think investment opportunities are fairly priced relative to the returns that you can get in other markets?
Well, look, as BLG Capital, we have brought almost 600 million euro of foreign investment to Turkey through our two private equity investment funds. And the last investment came in 2015. Since 2015, unfortunately, we couldn't bring any new capital, and our investors have been very reluctant to come back to Turkey. Why? Of course, lots of political volatility, the volatility of the Turkish lira, the economy, and we had to explain it to them. But at the same time, right now, this creates a lot of opportunity in Turkey. I think Turkey is very, very cheap, and there's great opportunities. Tourism industry in Turkey, 100%. This is the place to invest. We are expecting 60 million tourists this year, which is going to put us in the third in the world, and I think we have more way to go. I mean, France is only 75 million tourists per annum. I think we can easily surpass that. Turkey can easily be the number one in the world in number of tourists that we attract, because the quality of our hotels, the quality of our services are extremely high, and the prices are much lower than comparable countries. So I think in hospitality department, there's a huge potential for investment, and we will get that. As foreign investors see more stability in the Turkish economy, they are definitely going to come back. And in real estate in general, I think there's still great opportunities. As the interest rates in Turkey went up, markets have slowed down. So I think in the next 12 to 18 months, we're going to see a lot of buying opportunities in the real estate market.
And when you mentioned that it's been very difficult over the recent years to bring foreign direct investment into Turkey with your own partners, where has that capital gone instead? Do you have a sense of that?
Of course. Look, at the beginning, I've told you, right now, you can give mezzanine financing in the US at 18%. 18%. This is like loan shark. You know, this is 18%. These are big institutions. These are institutions that have invested with us in real estate. Today, I tell them, come to Turkey. They say, why? I have 18% guaranteed income in New York real estate. Why shall I come to Turkey? So with these interests, of course, nothing is going to happen. We have to wait until these interest rates go down, not only in Turkey, but all around the world. And I'm hoping that next year, there should be at least 1 to 2% decrease in the interest rates. Otherwise, the crisis in the world is going to be huge.
And when hopefully interest rates do come down slightly and Turkey becomes an appealing destination for inbound investment, which specific areas and markets within Turkey would you be really pushing to those investors to say, these are where the opportunities really lie?
I really think that Turkey has so much to offer in terms of residential investments, in terms of, I think commercial, it's still not that bad in Turkey compared to other countries. But of hospitality, I would consider as number one place to invest.
And just as a closing remark, where do you see the Turkish hospitality industry in 10 years' time, for example?
Number one in the world. I think we will have more tourists than anyone else.
Excellent. ladies and gentlemen, please join me in thanking Serdar.
Thank you. Thank you.